This is the Markets in 2 for the week ending June 9th, 2023. I'm Mike Salisbury, Senior Financial Planner and Portfolio Manager with Strong Private Wealth of Raymond James. U.S. equities marked a strong performance this week, with the S&P 500 posting its fourth consecutive weekly gain and even breaching the 4,300 mark. The Nasdaq Composite, home to many tech stocks, tied its longest streak since late 2019 with its seventh weekly rise in a row. Small caps also picked up the pace, showing signs of recovery after a subdued spring. The market's focus continued to diversify beyond big tech, with sectors such as autos, airlines, and energy leading the pack. On the flip side, software and the food and beverage sectors fell behind. In the treasury market, we saw a slight downturn with some yield curve flattening as the 2-year yield rose past pre-March crisis levels. The US dollar, meanwhile, weakened against its major counterparts, particularly the British pound. Gold prices continued their upward march with a 0.4% weekly gain. Conversely, oil showed a dip in prices despite Saudi Arabia's announced 1 million barrel per day production cut, causing WTI crude to settle down by 2.2%. The financial market held its breath this week with eyes turned towards the May inflation report and the June Fed rate meeting decision due next week. The tail end of the Q1 earnings season saw a shortage of corporate news, keeping the week quiet. Initial jobless claims showed an unexpected uptick this week, though continuing claims were considerably lower than predicted. Taking all of this into consideration, market forecasts for next week's Fed rate decision suggest a stable interest rate within the 5 to 5.25% range. However, there's speculation of this being more of a skip rather than a pause, leaving the door open for a possible rate hike in July. On the corporate front, Apple's developer conference, despite generating buzz surrounding its mixed AR/VR headset, didn't significantly move its stock. Electric vehicle makers Tesla and General Motors announced a collaboration on EV charger connection design, contributing to their stock gains. Netflix, on the other hand, saw a surge in subscriptions after cracking down on its password sharing. Whether you're a current client or not, if you want to know what this means for your investments, please feel free to reach out, because our job is to help you live a life well invested. Thank you for listening.